Hyperliquid's Hypecoin just rocketed into the top 10 of all cryptos, but is it the future of on-chain trading or a bubble that's ready to pop? I'm Brett at CryptoGX, and in this video, we'll break down what Hyperliquid is, how its decentralized exchange or DEX lets people trade with leverage, which is basically just borrowing extra funds for bigger bets, why its vaults and tokenomics push the price, the hidden risks like the heavy team control, and my blunt opinion on whether Hype really still has room to run or if the hype is ending right here. Hyperliquid is its new chain and exchange all in one. It uses its own layer 1 network, so it isn't slowed down by other traffic on another larger layer 1 chain like Ethereum or anything else. Every trade is written directly on the chain, and you can watch the live feed on various different public dashboards like this one at stats.hyperliquid.xyz. Now, instead of the usual pool system that most other chains have, Hyperliquid keeps a fast order book, which is an online list of all buys and sell offers. This helps for trades to match in under a second. The technology behind that speed is called HyperBFT, and the team says that it can handle over 100,000 orders per second. And as you can see here from the documents from Hyperliquid, mainnet currently supports approximately 200,000 orders per second, and they're planning to scale up to millions of orders per second once the execution can keep up. And with this high trading volume, there's also zero gas fees, so you don't have to pay anything for that. There's just a tiny trading fee instead. The main product on Hyperliquid is perpetual futures, or called perps. These are contracts without an end date that let you go long or short with leverage, meaning you can buy to invest assuming that it's going to go up, or buy to invest assuming it's going to go down in price. And these long and short are basically just bets in those particular directions. The combo of speed and low cost and openness is really what's fueling the Hypecoin buzz and Hyperliquid buzz as a whole. So the Hyperliquid platform was initially launched in 2023, but the Hypecoin was launched in November of 2024. And you can see from the Hyperliquid stats right here, over the last 2 years, the total volume is nearing $2 trillion in trades. And now solely for May of 2025, there was $244 billion of trade volume. That's massive. Now, the crazy thing is this volume is topping every other on-chain exchange. There are daily volume pops of about $6 billion from time to time, and you can watch them on DeFi Llama's tracker, which is right here. You can look at this little chart, and it'll show the total volume on any specific day as you kind of scroll along this chart. Now, the Hyperliquid platform also pulls in huge fees, roughly $70 million just in May. And if you put that over a year, that'd be about $800 million. And yet with this gigantic amount in fees, the gas fees stay at zero. Because trading is so cheap, generally whales feel safe moving lots of size. The great thing is that all of this data you can verify on chain through all sorts of different dashboards that are online. Now, market share tells a lot of the bigger story. If we take a look at the DeFi Llama dashboard here of the different decentralized exchanges, we see Hyperliquid is number 5 at about $480 million per day. Over the last month, $10 billion, with only 4 ahead of them, which being PancakeSwap, Uniswap, Radium, and Aerodrome. Hyperliquid also compares very well to Coinbase's spot exchange. If you see right here, Coinbase's 24-hour trading volume was about $1.5 billion, which is only about 3 to 3.5 times what Hyperliquid's volume is. User growth also tracks this jump in volume. If we look back at the Hyperliquid chart on DeFi Llama, you can see how everything kind of went down in April and everything's growing a lot here as well. The other thing that followed this is that wallet counts jumped from about 30,000 to over 400,000 in just a year. So these record highs in volumes and fees and users are the fuel behind Hype's fast climb on the market cap charts. So let's actually take a look at these charts. When Hype first listed in late November of 2024, it opened around $6.40. You can see this on sites like CoinMarketCap, as well as if we go over here to CoinGecko, you can see the entire historical price of each coin, any coin you look at really. Just make sure to click max if you want to see its whole timeline, and then obviously, 1 year for the last year, 3 months, and so on. But we'll leave it at max. Same thing with CoinMarketCap. Depends on which user experience you like the best. And so you can see after its launch in November, up in December, less than a month after it launched, it went from $6.40 to $32, which is absolutely insane. That's about a 5x jump. Now, as you can see, if you follow the chart, just like the rest of the crypto market, the price cooled off. We got into January and then further in March, and then, tracked with the rest of the market as most altcoins do. There were some kind of big sell-offs, especially right here at the beginning of January. And I would say probably about here, the end of January, and then another big one right here at the end of February. Now, as we're looking at the price, obviously the crypto market was all recovering here, but we did see a pretty big spike here at the end of May with the current all-time high of about $39. We're currently back down to that pretty much exact price point, which is giving Hyperliquid a market cap of $13.09 billion. At this current market cap, as you can see right here, it puts Hype at the number 11 coin of all cryptocurrency. And when you look at coin market cap and you go to the rankings, going down to number 11, it puts it ahead of Sui, Bitcoin Cash, Chainlink, Stellar, Avalanche, some other, pretty big coins that have been around for a long, long time. And it's, just behind Dogecoin and Cardano. Now, the interesting thing about Hypecoin is that it has a very different value when you factor in the fully diluted supply. This essentially means that there are locked away coins that are not on the market yet. So if you include the full 1 billion coin max supply, the fully diluted value, or FDV, sits at nearly $40 billion. So some upside is already baked into the price here. And if you didn't really get what that meant, essentially, if we value all of the coins on the market of Hypecoin currently at $13 billion, the fully diluted value is $40 billion. That means that essentially there is $27 billion of coins that are not in the market. Now, still, traders keep betting on new catalysts, talk of a Binance listing, bigger staking rewards, and more vault yield. In short, Hype's price chart mirrors its story. It's fast and loud and packed with FOMO, but not without a few sharp pullbacks along the way. But we've seen that within the whole crypto market, and this one is definitely very, very interesting. So the one thing that everybody is looking for is a moon level rise, and that moon level chart only matters if the token's design can support it. This is tokenomics. It's the rules for how a coin is created, shared, and used. So first off, let's take a look at the things that could support this. First is supply. As we mentioned, the total cap is 1 billion Hype coins, with about 334 million circulating right now, and the rest released slowly over time. Now, the distribution of these coins comes from the project's own documents. 38% is set aside for future emissions and community rewards. 31% dropped to early users, 23.8% for current and future contributors, and 6% to the Hyper Foundation treasury. You can see all this here on tokenomics.ai/Hyperliquid. If you scroll down and look at the total unlock process, you can see that about 23.8% was unlocked here, TBD 38.89, and further, as well as if you want to look up the actual Hyperliquid documents, that's where I got the original numbers from. Now, Hypecoin secures the chain by staking. You lock coins with a validator and earn new tokens. This is very common. It's something that Ethereum does and lots of other coins. The network uses delegated proof of stake, or DPoS. We're very familiar with POS from Ethereum, but essentially this is so holders can also delegate to somebody else if they want to. The minimum self bond is 10,000 Hype coins, and at 400 million staked, the reward curve pays roughly 2.3% every year. Unstaking takes less than 7 days, so coins aren't instantly liquid, but they're also not locked forever, and it doesn't take a long time to get your coins out. But utility goes further. Hype is the gas token for Hyper EVM. This is the smart contract layer of this entire blockchain. And it really anchors the platform's insurance assistance fund. Even more eye-catching than that is the HLP vault. This is when traders pay fees, those fees flow into HLP, which market makes and shares profits with depositors. At any time, you can check out the various dashboards online to find out how much is locked in the HLP vault. If we look back at DeFi Llama, we can see the total value locked currently is $408 million. You can see the value over time, and clearly it's followed the trade value as well. But in general, the yields have hovered around 30% APR. In short, Hype isn't just a badge, it powers security, fees, and high yield liquidity in short, Hype isn't just, a coin like any old meme coin. It powers security and fees and a very high yield liquidity engine. But all of those tokens that are not unlocked yet could pressure price if the growth slows. So it's something to watch out for. And basically what I mean by that is that if all of those coins are just flooded into the market, basically if you think about macroeconomics, if you increase the supply and keep the demand the same, then the price is very likely to go down. So with that, they have to manage how they release these tokens in order to not flood the market and keep the value up. Now, in general, good tokenomics don't really erase loud worries that are in the market. We know sentiment in the market is probably the most important thing. So how decentralized is Hyperliquid really? In February February of 2025, a validator from Chorus One posted that the Hyper Foundation controlled about 81% of all staked Hype. You can see right here, low validator rewards on mainnet don't cover high self-bond requirements, and decentralization is limited because 81% of the stake is controlled by foundation nodes. Now, this is well above the 2/3 needed to steer or even halt the chain, basically the rules for controlling what goes on Hype. Because the project runs delegated proof of stake, whoever holds the most stake has final say on the blocks. For a chain that's selling transparency, that feels really close to a centralized power, and the critique did not stop there. As you can see from the beginning of this same tweet about the closed source code, node operators must run a closed source binary. The core code still isn't on GitHub, basically a publicly available site where you can list source code for things. So basically, outsiders can't audit it for bugs or hidden switches. When users pressed the team, Hyperliquid replied that the code will be open sourced once it's stable and secure. And they announced that a foundation delegation program to spread stake across more validators. So far, those fixes are only promises. If the team follows through, publishing code and handing stake to community nodes, trust should rise. If not, Hyperliquid risks looking like a fast, centralized exchange wearing a DeFi mask. As you weigh Hypecoin, keep decentralization on your checklist. So what is the real big picture here for Hyperliquid? As you can see here from the DeFi Llama dashboard, looking over the DEX volume, about $480 million of trading volume. It's huge. Now, the power in this huge trading volume makes Hypecoin look like the next big platform coin, especially if you go back to the dashboard here that shows the comparison of all of the decentralized exchanges and having Hyperliquid here at number 5 within basically 6 months of releasing their coin and 2 years of their platform being available. But a couple things are, kind of keeping this a little bit of a wary option and flagging in red, really. The team still controls about 81% of the stake tokens. Until that stake spreads out and the code goes open source, this chain acts more like a private server rather than true DeFi. My take is pretty simple. Trade on Hyperliquid if you love really cheap fees, and maybe hold a small bag of Hype for some upside. But don't bet your entire rent on it until the decentralization is proven. If Hyperliquid's speed and the chance of big upside got you thinking about getting started in crypto, I'll put some links in the description for Coinbase and crypto.com where you'll get $50 in crypto just for signing up with those links. You can buy your crypto there, then transfer it over to Hype and start trading. And if you want to get into meme coins, I also left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed the video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.